it and significantly raise interest rates, it's going to be a big move in oil priced in yen. That would cause inflation in their economy. So even if the U.S. does have, huge stores of oil, and oil is actually becoming cheaper, denominated in U.S. dollars, if there is a blockade or supply shock or situation where logistics are paused for oil transport through the Strait of Hormuz, like I've been talking about for a long time, that will absolutely cause the Bank of Japan to have to react and raise interest rates aggressively to offset that inflation in their economy. So that's what I'm going to continue to watch for. That's the drum I'm going to continue to beat here in 2026. And I'm very excited about this year. We've got the Clarity Act on the horizon here. I've told you guys this before. I believe that XRP will appreciate before the Clarity Act is passed. And then it could be just right before. It doesn't have to be like a long time before. If it is a while before, I do think that it has a little bit more of a moat and can be implemented and used in multiple applications before there are other blockchains that may be considered for those for that settlement mechanism or that rail or the settlement of that market. Even if the Clarity Act does get passed, the compliance that's built into the XRPL, I believe, still gives it a significant advantage. We are still waiting on a few amendments. So this isn't something that I normally talk about on the lives. It's mostly what I talk about in the mastermind. It's not most of what I talk about in the mastermind, but I talk about this more in the mastermind, is the amendments that are on the XRPL that are being implemented. So we're waiting on permission domains. We're waiting on the permission DEX. We're waiting on batch. These are all things that large financial institutions actually need to be able to adopt the mainnet and use it at scale globally. Now, that's not to say they can't use it today using Corda or working with Ripple on one of their private permissioned side chains that they build out for the banks. Okay, so either one of those ecosystems allows them smart contract capability and the functionality that they need to be able to maintain, a record of account inside their own institution, but be interoperable with other counterparties utilizing XRP to settle over the mainnet just for the settlement component and not for more complex smart contracts that we know will have to exist later for the issuance of stable coins and all the other things directly on chain. Now, the way that we get there, we've already seen this with Soraband smart contracts on XLM or Hyperledger. We know that there is a viable way that you can implement lightweight smart contracts and still have high level of instant settlement or almost instant settlement and high throughput for TPS. I think that hooks being on the side chain over the long time will likely get migrated to the mainnet. And if that ends up being the case, then a lot of the same functionality that we see with Soraband smart contracts, a lot of the layer 2s for payments and processing have been built out on Hyperledger. A lot of people like Zbeck, a lot of people like Stronghold, a lot of people like Velo. There's a lot of other applications that are specific use cases or niches that are built out on top of Hyperledger that are peer-to-peer, merchant service type things. The XRPL is more for back-end settlement of large financial payments, including markets. And that's where I think the majority of volume is going to continue to grow, but there does need to be eventually some smart contract capability either as a layer 2 or natively on the network for derivatives, which is what I think, again, a lot of people have quoted me, I've talked about in the past, a 5-digit XRP. Derivatives have to be on-chain, and they need to be settled through XRP for that type of price to be reached. We're a ways out from that. We are going to have the stock market tokenized this year. We're going to have back-end settlement of the stock market through Project Ion and the DTCC. You've got Canton Network coming out strong for the tokenization of the stock market. Settlement and tokenization of the stocks themselves are two separate things, and I want to make sure people understand the delineation there. When I went to Swell this year, we got to watch Monica Long interview the president of NASDAQ, and when she did, she talked about exactly this: back-end settlement, reconciliation of the trades on the stock market. And that is the first application for distributed ledger technology that they are going to use. Again, Project Ion, developed in cooperation between DTCC and R3 is finalized, been running in tandem since August of 2022. So you got a long time that's actually been working. And I do believe that that is absolutely what they're going to use to settle the back end of the stock market. You just need enough liquidity in XRP to be able to start settling those transactions. This all goes back again to the domino theory. If you guys have been living under a rock, just at a high level before we get into the questions, because I have a really good super chat here. Chain of events: oil spikes, Japan raises interest rates, they rotate out of U.S. treasuries and buy their own bonds, U.S. bonds flood the market. We have the stablecoin bill passed here in the U.S., so we have banks and institutions that will soak up those treasuries as they flow onto the market, because the demand here for issuing stablecoins will be high. It's around $2.3 trillion total globally. That is, foreign debt held outside the U.S. treasuries that will flow back here. And guess what the amount of, estimated demand for stablecoins is? $2.3 trillion, exactly the same. So that'll be shored up. It'll shore up the bond market, but with the reverse carry trade unwinding at scale, you're going to see a haircut across markets. Anything risk on, risk off, it's not going to matter where your money is, there's going to be a repricing. So gold, again, I'm going to be unpopular. Same thing with silver. I think you're going to see a 50% drawdown in both. I've called for, $2,000 or $2,100 gold. I think maybe that's a bit aggressive. Now that we're at 4,500, I was making those calls around, 4,000. So it could be, $2,250, $2,300 gold. But I do think it's going to be a big drop. And then also, as they shore things up with COMEX here this year, January 1st, 2027 is when UK adopts Basel III. And we are implementing Basel III in the U.S. here in 2026. So that's going to require, full backing of all of the trades on the COMEX, audited. And really the only way you can do that is moving it on chain. Another big piece of news, that kind of goes along with all of this. Well, let me finish the domino theory and then we'll get to that. You know how I am. I like to tangent. Huge drawdown. Bitcoin has the same problem. Bitcoin and gold, both big drawdowns. Tether is then depegged. So exchanges need other liquidity. And they're going to have to start utilizing XRP, just like in Shane Ellis's theory, to be able to settle inside of the exchange. And that's why I say, looking at the wallets on the exchanges only tells you part of the story. People can look on chain and see how much XRP is held by exchanges. You can't see how much XRP is actually available for trade just by looking at the wallets. Each wallet's designated for specific stuff. You can discern which wallet is the trading wallet. If you go into each exchange on XRP scan and look through all the transactions, you can slowly figure it out. If it's a super high volume of, moving around of XRP there, it's probably the trading wallet. If it's something that's stagnant and hasn't had a ton of transactions over the past, 6 months, probably something that's part of their treasury or a stockpile for them that they're going to use in some other application, right? So anyway, I think that there's less than 100 million left on the OTC desk, and